Hello and welcome to Car Dealer Live. My name is James Batchelor and today we are talking to Close Brothers Motor Finance about their new partnership with Auto Trader and catching up with them about the motor finance market. Joining me as ever is the Managing Director, Seán Kemple. Hello, Seán.
Hi, James. How you doing?
Very well, thank you. Lovely to have you on. Always good to talk to you, Seán. Now let's get straight to it then. You've announced, well, October last year, you announced this really interesting new partnership with Auto Trader, and it's quite a fascinating new venture with them, isn't it? Just tell us a little bit more about it.
Yeah, sure, James. I'm good to be on. If I could just go backwards a little bit, if that's okay. Over the last number of years, we've been completing a transformation program in Close Brothers Motor Finance. And a lot of that focused in on the back office piece, new underwriting platforms, new telephony systems, CRM tools, all those pieces that dealers might not necessarily and partners may not necessarily see. We also wanted to build on our proposition. So we knew digital was a clear demand coming through as ease becomes a big theme from customers, dealers and brokers. But we also wanted to do something that was, in our words, market defining. So how can we enhance the proposition that goes beyond just what we need to provide into our dealer partners? And we looked to enhance that through insight. One of the pieces of feedback we got from the multiple focus groups we conducted with our dealer partners through the program was help me to understand how my stock can be more effective. So we fund a number of forecourts through our forecourt funding proposition, and we saw an opportunity to speak to those dealers about consumer demand for their vehicles on the forecourt that they had right now. Not what vehicles sold in the past, but what vehicles are likely to sell and at what price point for the future. So we partnered with Auto Trader to bring in that consumer data. Obviously, they see the widest amount of the marketplace. So we bring that data in and we bring it out to our dealer partners and speak to them about what demand for their vehicles we are seeing on the forecourts and how should they price effectively.
Well, as we know, data providers and insight providers, they don't come much better than Auto Trader, let's face it. But what kind of insight does this partnership give your dealer partners?
Okay, so really simple. We have a large number of our dealers. We fund their forecourt. So we can see the stock on the forecourt through our systems. We take the data in from Auto Trader, and we can speak to the dealer about propensity for sale for those vehicles, how they're priced, what demand is in the marketplace, and how they should be potentially priced depending on their strategy to either move the vehicle as quickly as possible to release profit or maximize profit over a longer period of time. So the data allows us to show dealers exactly what's in demand in their area relevant to those vehicles. Years ago, we would have spoken about, tell me what's selling in the marketplace. That's just one element of it, James. It's what's sold in the marketplace previously, but also what consumer demand are we seeing coming through third-party classified sites like Auto Trader, which will tell us what's about to hit the forecourts.
Well, especially as, I mean, I know the last 2 years haven't exactly been normal, but they've been a good example of why data is so important, because especially the used car market, it's in some cases it's been changing on a daily basis with prices changing, demand changing, demand for suddenly changing from SUVs to MPVs. So having those kinds of tools at dealers' fingertips, I mean, it's never been more important, really, has it?
Definitely not. And if you cast your mind back when retail prices started to really jump up, James, over the last 12 to 18 months ago, about 12 to 18 months ago, we were seeing a lot of dealers that were actually saying, I'm not going to pay those prices at wholesale because I'm afraid of actually retailing at the prices that I'm going to purchase at. Having the data to understand what consumers are willing to pay, what price points they're searching for, allowed us to work with a number of those dealers to help them stock the forecourt. At one point, we were seeing dealers at 50% of their forecourts because they were too concerned to buy the stock at the prices it was selling at wholesale, James.
So just explain to me how it works. Is this a bolt-on tool that dealers have to pay extra for, or how does it work?
No. So basically, we take the data in from Auto Trader. We have an account management team of circa 100 people around the UK, James. And those account managers will visit our dealer partners, review the stock they have on their floor plan with us, and talk about that propensity. So really simple. It's all done through a live dashboard through a program called Tableau, and it's one-on-one with our account management team and the dealer. This is not a charged benefit. This is back to that partnership piece. This is us adding more value into our dealer partners. You know, we want that dealer to sell that vehicle as quickly as possible based on their strategy. There are charges in our funded proposition based on the term that that vehicle sits on our facility. It's not something that we want to make money from. We want to actually do the opposite and get the vehicle moving as quickly as possible for the dealer partner. So you could say we are supplying the dealer with the funds to purchase the stock. We're then supplying the dealer with the data to manage that stock as effectively as possible and reduce any impact on potential fees, maximize the speed of sale for that vehicle as well.
So let's just get this straight then. So you're obviously you're providing the finance to the dealer, but you're also helping them, working in partnership with them to give them better insight on how to sell those cars. So surely this must be pretty unique in the marketplace. There can't be many other providers who are working so hand in glove with their partners here.
I think I could be confident to say that nobody else is working at this depth. There are other providers that provide insight, which we did previously, static PDF information, and here's the top 10 most financed vehicles and items like that. But this is really unique in terms of that JV with Auto Trader to bring that data in and to start working with the dealer partner. And this is just the beginning of it as well for us, James. There's more that we want to do. Actually, right now, we're spinning up something for motorbikes, which will be market defining for motorbikes as an industry, because nobody is really providing live data into motorcycle dealers. So that's a separate one we're doing. And we want to focus in on the LCV market as well. So yeah, it is unique. It's what we call market defining across our organization. So it's not just catching up in the market or being competitive, it's market defining. And as I said, we're seeing some great success stories. Seeing dealers increasing prices on vehicles based on demand, that goes against everything from a dealer's DNA. Yeah. We actually did a video shoot a couple of months ago, about 6 weeks ago. One dealer up in Scotland, while the cameras were in doing a testimonial, he increased the price of a vehicle by £1,200. It had been on his facility for, I think it was 60 days, maybe a little bit longer. The phone rang while they were in filming and the vehicle sold at the increased price. Like, just brilliant nuggets that we're seeing. And just again, brilliant for dealers. The days of buying a vehicle at wholesale and then adding on, so working trade up, are kind of gone, right? The consumers online, they understand that vehicle and the competition for that vehicle more than the dealer does right now. Yeah. So consumers king in that sense. Giving a dealer that information is just gold, James, absolute gold.
Well, let's not forget that you're working with Auto Trader, who are able to give you fantastic insight and data, but also some of that data is available to customers as well. So when customers go on Auto Trader or similar classified websites, they've got various tools at their fingertips, and they understand some, like you were saying, sometimes they understand the market better than dealers, don't they?
Yeah, absolutely. You think about a consumer, in that last 6 weeks of changing a vehicle, 12 to circa 18 hours of research on the vehicle and narrowing it right down. They understand that 5 other vehicles with similar mileage, similar spec, whatever that is. And a dealer really can't get into that on their own by searching every vehicle on Auto Trader and narrowing that down. The market's also so fast, James, so quick. This market changes like the stock market on a minute by minute basis.
Yeah. Now Sean, we've spoken about this before, especially last year when you won Finance Provider of the Year Prime in the 2021 Car Dealer Power Awards. But it's worth talking about it again. it's about your customer service. Now, you know, how have you been helping your dealer partners through these challenging times recently?
Yeah, I think 2 years ago, right, we entered into COVID, James. Don't want to bring anybody back to that and give anybody nightmares, but I think the first piece for us, our mantra is lending through the cycle. Okay, so we lend through the cycle, whatever that cycle is. We are just consistent. That's what we do as a business. That's one of our USPs. As we entered into the pandemic, we knew our dealer partners, particularly the independent marketplace, were going to come under some pressure and challenge. Lots of questions, lots to figure out. So first of all, we spun up a dealer hub, and we pulled in our colleagues from our asset management business to help give financial advice on that hub. Number of videos set up, and you know what to do from an employee perspective, what to do from a tax perspective, what loans are available to me. So we developed that straight away. We also didn't furlough or make any staff redundant, so we kept our team on. We approached it very simple. We had just introduced a CRM as part of our transformation program, thankfully, and we approached it quite simple. We contacted the dealer, asked how they were, how their family are at that point in time, obviously, how their colleagues are doing, and what can we do to help, and what cycle and what do we need to be engaged with. So that's the first piece. So we were there over that initial lockdown. We didn't go anywhere. We leaned in further, probably because we were on the phone rather than face to face, because we couldn't get out. So we supported our dealer partners straight away. Obviously, then we saw increased demand, just, you know, huge demand coming on the back of the first lockdown. We had 27,000 customers go on forbearance. We had dealer partners go on forbearance as well for funding facilities. But we reached 26,000 customers on forbearance and this huge demand coming through. So we've actually increased our headcount by over 100 people in the last 12 months to support that demand that's coming through and support that service to our dealers. The other thing that we did, we like to keep our finger on the pulse, James, and that's on a daily basis, but we also survey our dealers on a quarterly basis. And we could see from the comments that were going into the survey, or for some of the data that we track on a consistent basis, we could see where we needed to flex to and shift and change. And that's another way that we supported our dealer partners, probably, you know, in the background a little bit, but us trying to make sure we were focused in on the right areas. And we continued our transformation program. That was one of the big parts. We continued our transformation program. We didn't slow that down in any shape or form either.
Yeah. One thing we really saw during the last 2 years is this shift in terms of types of cars people were financing, and to put it very simply, there were two big growth areas, wasn't there? There was the necessity purchases, and there was also the purchases where people were treating themselves. Yep. What kinds of trends are you seeing now? Are you still seeing those trends, or has the market changed again?
We're not seeing those trends as much, as they're not as prominent as they were coming out of each lockdown, or, you know, when people couldn't get away, couldn't get on holidays, you saw people treating themselves to a different vehicle. So we saw our average advance increase quite significantly, which would be reflective of people getting a higher quality car, and also the used car price index increasing as well. What we have seen is, you know, from a light commercial vehicle perspective, we just saw those numbers absolutely rocket, because of, you know, all of us becoming more online shoppers and deliveries just becoming, you know, daily. I think I'm first name terms with our D driver at the moment, you know, so that created huge demand. So that put demand into the LCV market. We've definitely seen that and continue to see that, which is really, really good and great for the economy in that way. In terms of cars, we're seeing that kind of plateauing out. We're seeing our average advance stay at a stable amount over the last number of months, and that would reflect consumers probably looking at more consistency, or even moving from not being able to get a vehicle from a new perspective into use. So still a high average advance, and higher than we were pre-pandemic, but not the fluctuations we saw after each lockdown.
Can I dare to use the word normal? Are we sort of getting back a little bit back to normality, would you say?
So it depends what normal is in our industry.
Well, yes, it does,
So,
doesn't it?
you know, like thinking about this quite a lot. So we've had, if you just think about it, we've had a number of years of disruption from a new car perspective. We had the challenges around diesel. Do I buy it? Do I not buy it? Clearly impacting consumer preference and choice. We then the challenges around WLTP. Do I hold off? Do I not hold off? If you remember that September 2018, I think it was, or 2019. We've then had COVID. We then have production challenges. So from a new car perspective and a new vehicle perspective, it's a real challenge. That's resulted in the car park being fewer cars than we would like it to be, and therefore more demand coming through from used. And we're likely to see more challenges coming through as well. So obviously the dreadful scenes that we're seeing in Ukraine at the moment, and the impact on the automotive industry there as well. So that could cause more disruption for us, James, as production shuts down in Russia, and also Ukraine being a significant supplier of some tools and products into automotive as well. Then we have the other shifts that we're starting to see, which is around consumer again. We're seeing buy now, pay later becoming quite a significant chunk of expenditure and borrowing in the UK. That's only on the rise. We're seeing consumer preference moving from I want to own to I want to rent, I want to subscribe. So we're seeing all those challenges coming through as well. So I'm not sure we're going to see a norm for quite a while. I think we are getting to a norm as a country and as people getting out and about in the shops. But as an industry, I think we've a bit to go through.
Yeah. Of course, all of this obviously affects the used car market. And I think a lot of people were hoping that there would be some kind of normality this year, but especially with what you've just said and the ever worsening situation in the Ukraine, those things do have they are going to have a big impact for the rest of the year. How do you, from a finance perspective, you've got your finger on the pulse here, how do you think the market is going to perform for the rest of the year? Is it still going to be very up and down and difficult to predict?
I think it's a little bit easier to predict versus where we were for the last 2 years with lockdowns. So fingers crossed that we don't see any more of that coming in. I would like to see us, I'm optimistic by nature, I would like to see us north of 8 million units by the end of the year and back to those pre-COVID levels. I think the challenges in the new market will continue to drive used car performance in that sense. So I do feel that we will go above and restore north of 8 million plus. The other challenges, of course, that we're starting to see. So in January and February, we had 2 really strong months, up year on year. Of course, we're lapping a couple of the lockdowns there in January, but up year on year quite significantly across both months. We have seen the start of March a little bit slower than normal. And is that due to the increase in utility bills, increase in cost of living, and so on? The situation in the East that's happening as well. We'll keep an eye on that, James. So I would still be optimistic for a north of 8 million figure across 2022.
Yeah. With new car supply, I mean, there were hopes that it was going to improve dramatically in 2022, wasn't it? But really, realistically, that is 2023. Yeah. Is that the same viewpoint that you think? Do you think this is still 2022 is not going to be? It's going to be another year of pressures and supply constraints. 2023 is probably going to be the first year where we might see some signs of getting back to normal.
Yeah, I think last year we saw the OEMs and manufacturers had booked enough chips this year for a bumper year. The challenge is actually still getting those chips produced with everything that has to happen. We are seeing manufacturers do some really good stuff, right? So we are seeing manufacturers limit packs, limit the demand on chips. But then there's a flip of this, James, as well. We are seeing a more advanced vehicle coming through, particularly when we move to electric vehicles. So we are seeing more sophisticated technology that has more demand on semiconductors. I have heard of, stories around individuals getting one key for the car and we'll send the other one out. We can upgrade your packs after sales 6 months later, take this vehicle now. So we are seeing the manufacturers trying to figure out ways through that. I don't know if they've anything more in the pipeline to really break that dependency on semiconductors and to reduce the demand that we see in new cars. But I can't see anything changing from production on semiconductors into manufacturers to probably meet the demands that are coming through from consumers right now.
When it comes to used car prices, I'm sure you were as staggered by us and the rest of the industry at how much they grew last year. On average, 27% is what we're hearing. The last few months they've dropped a little bit, but they're still far higher than they would be normally. Do you think we're still going to be prices are still going to be high for the rest of the year?
I do, James. Yeah, I think everything I just said there a second ago about the challenges we've had in new car for the last number of years, the amount of vehicles that are actually in the car park and on the roads in the UK, the challenges we're going to have in new car. There's still going to be a lot of demand going into used, and I think that's going to keep the prices relatively high. Yeah.
Finally, Seán, it's quite like we've been saying, it's a challenging time for dealers at the moment. But where do you think dealers can improve their businesses the most at the moment?
So there's a couple of points for me in that, James. I think the first one is understanding that consumer. So that consumer demand coming through, those changes in consumer behavior, those changes in consumer preferences, working with your partners to understand that is absolutely vital. We're seeing the rise of digital disruptors within our industry, which is a good thing because that's where the consumer is going, right? That's what the consumer is doing. What lessons can we learn from that? What lessons can dealers learn from that? What tools are available for dealers to compete? It's quite interesting, isn't it? When you look at somebody like Kazoo and their proposition and their offering, and then you look at somebody like Virtue who have significantly more stock and will deliver the vehicle to you and you can choose it online. It's the proposition piece, isn't it? So there is this element of where dealers can look to partners to support them from consumer, to understand consumer preferences and making sure they have that proposition to offer as well. Plenty out there to help in that way. I think the other way that dealers can help themselves as well is, and this isn't a plug for our funding, but a lot of dealers still don't use funding for their forecourts. They are depreciating assets on a forecourt. So again, look to those partners that can support and take some of the burden away from particularly SMEs, James.
Well, Seán, always a pleasure to have a catch up and have a chat. That's all we've got time for today, but thanks very much for joining us.
Thanks, James. Speak soon. Bye-bye.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.